Here's a simple hack for how you can increase your pension by up to 30% with one move. How a pension usually works is you work for a company for X amount of years, maybe 25, 30 years, and then when you retire, they give you a guaranteed monthly income for the rest of your life. The thing they don't tell you about that monthly income is it's actually coming from an overall balance that's been withdrawn from your paycheck over the time that you were with the company. Now, if you retire and you're taking those distributions and you die prematurely, the beneficiary of that remaining amount is the business, not your spouse. What some of your better companies do with bigger unions, they'll do something called a joint survivorship. What that basically means is instead of getting the full amount that you would normally get on a monthly basis from your pension, you get a smaller amount and your spouse also gets a little piece as well. Under this model, if you pass away before your spouse, when you pass away, then your spouse gets bumped up to the larger amount, which is what you were receiving. But she doesn't get the cumulative amount, so she's still getting less money. Most of the time, people die before they've received all of the money from the pension. And so this pension model is great for businesses because they know statistically, especially out in the Midwest with your railroaders, your coal miners, those very high and labor intensive and physically demanding jobs where people are most likely not going to live for a long time into retirement. They're just raking in a lot of money from these pensions. Every time their former employees pass away and then their spouses pass away, they're just collecting fat paychecks. The number one hack I want to share with you to be able to get the most out of your pension is very simple. The first step you need to take is you're going to tell your employer for your pension, you want to take the full maximum amount possible, just for you. Let them give you as much money each month that they can possibly allow. That's solution number one. That's how we increase the income by up to 30% because you're actually taking more money. But you might ask, well, where does the balance go when I die? Doesn't that still go back to the business? And the answer is yes. To solve this, all you need to do is buy a permanent life insurance policy where the death benefit is equal to the amount of the pension. Therefore, you're going to be able to take as much income as possible from the pension, and when you die, instead of being left with nothing, your spouse is then able to get a large lump sum, and essentially as if they were the beneficiary on your pension. People look at life insurance as something that's super expensive and it's a taboo word, and most of the time they think if it's going to be cheap enough for me to afford, it's going to be term insurance, which is most likely going to expire before I actually die. I'm going to outlive that term life insurance policy. And that's why you're going to want to get some form of a permanent death benefit. In this situation, for me personally, I would go with either an IUL, which is an index universal life, or a whole life for the permanent life insurance death benefit. When it comes to your pension and passing on your wealth to those that you leave behind, you really are going to have two partners. You're going to have the government and you're going to have the beneficiary. Okay? If the beneficiary is the business and the taxes go to the government, then your family doesn't get anything. So the whole goal is how much of that money can we give to where the only partner you have to split your money with is your family. I've dedicated my life to teaching people about money. So if this raised any questions for you, feel free to let me know in the comments. Every day I'm working with people to help maximize their money for now and in the future. I'm happy to share any information with you. It's up to you to take the first step. And the first step is simply ask. And step number 2 would be make sure you're subscribed.